Hi everyone, welcome to the second episode of WAC's Coffee Club Insights. It is a great pleasure for me to welcome Mr. James Dauman, Managing Director at R.J. Fleming & Co. Singapore. As a former Executive Director at UBS Investment Bank in London, Mr. Dauman specializes in private equity and sustainable investments, with over 20 years of experience working in Europe, Southeast Asia, and the Middle East. His expertise has led him to Singapore, where he is currently managing a portfolio of private investments in the food and beverage sector, alongside his role at R.J. Fleming. Furthermore, Mr. Dauman is very passionate about giving back to the less fortunate, as he is the co-founder of the Nepal Initiative, a non-profit organization which focuses on the child education and the development of small and sustainable businesses. In today's session, Mr. Dauman will be sharing with us his expert opinion on the outlook of the private equity industry amidst the global pandemic, and also his personal experience with sustainable investing. I'll jump right into the first question, Mr. Dauman.
Okay.
It has been widely reported that private equity firms such as Blackstone and KKR have been accumulating cash through fundraisings in recent years. That has resulted in a record $1.5 trillion of unused capital for future deals. Given that COVID-19 has created unprecedented market dislocation, do you believe that this is the right time for PE firms to start investing in distressed businesses that need to raise capital? And what are some of the principal considerations you would make before pursuing a deal?
I think you're absolutely right. There's a lot of dry powder out there, and there's a lot of opportunities. I'm speaking from an Asian context because obviously that's where I am, but clearly this is not limited to here. There's a few aspects of this question that I want to talk about. The first is the funds that are existing today and have dry powder. Right? Remember that they have dry powder, but they also have portfolios. And what I am seeing is there's a lot of time and effort being spent on what's happening in their portfolios related to COVID-19, right? So that's taking a lot of management time and a lot of thought. So that's just one thing to bear in mind. In terms of what are the opportunities will be everywhere. Right, and valuations are considerably lower. What we saw is that people initially, when lockdown started, and this, I think the world realized that this was a global problem and not a China problem. I think people panicked a bit. They shut down and they stopped looking at new projects. Because like I mentioned, they were looking at their existing portfolios. What we're seeing now is that that's starting to open up a bit, and people are now out there looking at opportunities because they can see that there are some great opportunities out there, depressed valuations. If you look back at history and you look at the best vintages, and by that I mean the year when a fund was raised, after a crisis is a great time to raise money or to have money in your pocket, for fairly obvious reasons. So you look at the performance of funds that have started post-crisis, they typically perform very well because they're getting better valuations than they would have, even 6 months before, right? So in this case, so yes, I think the biggest question, this is real because I am looking at opportunities and I'm also raising money, is what's the right time? Where's the bottom, right? There's a huge amount of pain, particularly if we look in the SME space, in Asia. There's a lot of companies really, really struggling, but is it going to get worse for them before it gets better? And just take anecdotally, the example of the property markets in Bali, for example, or hospitality. Their hotels have been empty, their beach clubs are empty. And they've been offering. There's been offers to sell assets for a while now, but people that I've been talking to are saying, well, no, we're waiting, right? Because this is not going to reopen for a little while. So I think timing is absolutely critical, and that applies whenever you're investing, but particularly now is when do you really feel you're at or close to the bottom, and it's not going to get any worse, because you can get better deals if you wait out. To flip that on its head, we look at equity markets right now, which are recovering very strongly. Some people don't really understand why, including me, but you might miss the boat, right? You might find that you get there and things have started turning around. So I think that's a major consideration. Another one, of course, is this COVID-19 has done a great job of exposing businesses that are not well run, that have not managed their cash flow well, that have not prepared for a rainy day. Now, very few people were prepared for this particular type of event, the magnitude of it. But we'll come later to the businesses that I'm currently involved in. We one of them in particular, we've deliberately set it up to be very, very lean in terms of our fixed operating costs. So as soon as we realize that the world, our markets are shut, we just switch off discretionary costs, and we have a very, very, very low cost business which we can keep going, not indefinitely, but for a long time until markets open. So as an investor though, what are those businesses? What are the businesses which are going to recover? What are the businesses which are going to be a critical part of the post-COVID environment, right? And in the whole sustainable and impact space that I've been involved in, we see a huge amount of interest in there. Whether it's healthcare or critical infrastructure, sustainable agriculture, sectors like that, which have been thrust to the forefront of people's minds and governments' minds in particular. I think there's a very good opportunity to pick the next winners, right? And quite frankly, to stay away from the losers. That there are industries that either will never recover or will be recovering very slowly. I mean, the airline industry is the obvious one. So I've gone a bit off the private equity side there, but I think yes, there's money. If I had a pot of money, that's what I would like now. Is some dry powder, as you put it, to go out into the market and pick up very high quality businesses or assets that need some cash, that have good management teams. I mean, again, this whole thing will have exposed bad management teams, and in the same way, because their businesses will, they may be able to paper over cracks when things are going well, but when things aren't, that's when good management teams come to the fore. And so I think you'd be looking for that. You'd be looking for resilient businesses and businesses which you see as benefiting post-COVID.
Yes, thank you for answering, James. Just a follow-up question: what type of industries do you see as dying industries that have been affected by COVID, and you think that they will not be able to recover pre-COVID returns?
I mean, like I say, airlines is the obvious one. I mean, even they're saying, 5-7 years, if they're lucky, to get back to pre-COVID levels. I don't know if there's going to be a psychology change, a mindset change amongst, the global population who, may think twice before they fly places now.
Social distancing measures.
Social distancing, but also a realization that travel was in many ways ridiculous. I mean, people flying, from London to Portugal for the day, right? Things like that are not necessary. And from a business standpoint, remote working and video calls, we're getting a huge amount done, right? I mean, the efficiency with which I can work in a day is much greater than if I have to get up, go to the airport, fly to Jakarta, sit in traffic, go to 2 meetings, go back to the airport, fly back to Singapore, right? Sometimes you do need to do that. Don't get me wrong. And we will never eliminate face-to-face meetings because they're important. But I think this has made a lot of people realize on the business side what they can do, even from their living rooms, right? It's been a wake-up call for a lot of people who had just got into the habit of hopping on planes all the time. That's on the business side. On the personal side, I think obviously people are always going to want to go on holiday, but I think airlines will take some time. I mean, the energy sector has clearly taken a battering as well. It was already under pressure, and what we're seeing is those who are pushing the renewable energies agenda, hoping that they can use this as an opportunity to really accelerate the phasing out of fossil fuels. It's not going to happen overnight. I mean, let's be realistic about it. Coal-fired power is here for a while, and the oil industry will be here for some time. But I think there is great optimism now that this has been a great spur for renewable energies, and when you see the costs coming down of those technologies, such that in many cases now it's cheaper to go with a renewable. So I think the fossil fuel industry will never be the same. It won't disappear, but I think this has been an event that will change them. And I'm just trying to think. Hospitality will take a long time to recover, I think. Flying off and staying in a hotel in Phuket for the weekend, will people do that in the same numbers that they were? But that's obviously linked to travel as well, to the airlines. But I think so if hotels and stuff will find their way, but they'll have to look at a different business model.
Yes. In your answer earlier, you mentioned that sustainability will be at the forefront of investment strategies in the future. And so moving on to our next question, at the start of 2020, in his letter addressed to all of BlackRock's clients, CEO Larry Fink stated that the finance industry is on the edge of a fundamental reshaping of its culture and practices. He alluded to the fact that climate change and sustainability will play a greater role in the evolution of investment strategies. Therefore, within the ASEAN region, do you think there will be an increase in appetite for asset managers to invest in sustainable and innovative financial structures? And what are some of the examples of these financial structures that you have come across in your experiences?
So I think the short answer is yes, there is an increased appetite. I think you need to break it down into both countries and markets, and public or private. Even before COVID, Larry Fink, this is his second or third letter where he's talked about sustainability, and BlackRock has taken some time to actually walk the walk, but they're getting better. Right? They are, and they're clearly an industry leader that need to be taking the lead on these matters. But with BlackRock, it's largely you're talking about the public markets, right? You're talking about equity and fixed income products, and they do what they do, right? There's a whole nother discussion as to whether you buy this share or that share or sell that share or that share actually makes a difference to the rainforests. But that's a debate to be had separately. I think in this region it varies by country quite considerably. Japan has been very forward thinking through its national pension fund. Has been investing in allocating a lot towards sustainable products for a number of years now. Other countries, I want to say, Hong Kong has done a bit. Singapore, I have to watch what I say, but it's a mixed bag in Singapore. I think there's absolutely an awareness, but there's not necessarily, when you look at GIC and Temasek on the larger scale, are they really focused on it, or do they have divisions which are focused on it, on sustainability? Indonesia has pockets of really positive pockets on the sustainable side within the government. There's an understanding, and yet flip that round, they're destroying rainforests in Papua at the same time. I mean, it's sort of, you find one positive and then you find a balancing negative. It's a very hard one to understand. But from an investor standpoint, there's definitely a much higher level of awareness than there was, at an institutional level and at, let's say, a family office level and sovereign wealth level. And if you take ESG, right, the environmental, social governance factors, that apply, typically in the public markets, those are becoming the norm rather than the exception. That people are at the very least looking to satisfy basic ESG criteria before they invest. And then below that, you have a whole level of further detail that you can, of analysis that people are taking. You can go from a negative screen, okay, we won't invest in those, to a positive impact strategy where you only invest in businesses which seek to create positive impact, rather than just doing it by accident or not doing something, if you see what I'm saying. So again, I'm jumping over a little bit. I'm trying to come back to the specific question.
There's a lot to get through here.
Yeah, look, yes, there is increased appetite, varies by country, varies by product. In the public markets, generally globally, there's more available, right? So you have, for example, a sustainable ETF. BlackRock have lots of those, right? It's a very simple product, but does that and it can tick a box for some people, but is it really an impactful, sustainable product in that sense? Right? Probably not. It's probably at the least impactful end, but at least it's in the right direction. And then you go, you come out of it, then you have green bonds, you have blue bonds, you have forest bonds. So actually, I think in the fixed income space, there's some really good products, which are growing. I can't remember. I think that the number last year, about somewhere around $300 billion of green bonds were issued. And these are bonds where the proceeds are going for specific use that is classified as green, and that has to be validated externally. They can't just. There are people who do try to pretend they have a green bond, but they quickly get told that that's not going to work. So equities, ETFs, and sustainable funds, mutual funds, fixed income on the bond side, and then we step into the private world, private investment. That's much more diverse. There's an awful lot more out there. From a private equity fund that focuses on impact, impact funds. There's a number of those, and there's a growing number of those. To just single projects, to crowdfunding, to carbon credits. There's a whole range of products in that world that are available to investors. And what are people doing? Institutional investors do what they do. They have to invest. They have a mandate, right? They have to invest in liquid products typically. And they have fiduciary duty to maximize the return on those investments, the risk-weighted return. So there has historically been a perception that impactful investments sacrifice return, but what the practitioners are now demonstrating is no. If anything, investing sustainably enhances your return, right? And if you talk to, for example, UBS, in their wealth management business, they've been focused on sustainability for some time now, and they actually can show for, I think, at least a year or two outperformance of their sustainable portfolios over their conventional portfolios. And I think what's happened with COVID-19 as well, sustainable products have outperformed conventional as the markets went down the longer, because generally they take a longer term view, and particularly on the ESG side, if your business doesn't have good governance, is not socially responsible and environmentally responsible, there's probably something wrong, right, somewhere. So I think it kind of makes sense even at that level. A couple of examples. There's a product which I really like that was issued in Indonesia a couple of years ago by a joint venture between Michelin, the French tire maker, and Barito Pacific, which is a big forestry company in Indonesia. So this bond was issued to fund a new rubber plantation. The total size of their concession was 80,000 hectares, and around half of that was allocated for protection. So basically they said, right, we have this plot of land, we're going to develop this, but the rest is protected forest, right? And at the same time, we're going to run community programs and provide the communities with land and teach them new farming techniques, et cetera, et cetera. So they issued this bond, and what they did, though, that was very clever, is they split the bond into, I think, 5 or 6 different tranches. The first top one, the lowest risk one, had a guarantee from the US government, from USAID, right? So a conventional bond investor can buy that bond, and it's like buying a US government bond, effectively, right? So low risk, low return, but that's some people's mandate. Right at the bottom of the stack of the bond is the much higher risk piece, right? But higher return, right? Doesn't have a guarantee, but that goes to different investors and actually impact-focused funds who are able to take that risk and do that more analysis. That's sort of product they went into. So I think the more of these blended structures, it's blended finance is the term that's used. More and more of those are appearing, and there's some really clever stuff out there. That we're seeing that is able to address the investment criteria of a multiple different types of investors, and therefore get these deals away. It's not easy yet, and it's not commonplace, but at the higher level, like I mentioned before, green bonds are very popular. Even in this region now, it's gaining traction. So I think that's probably enough.
Thank you for that passionate answer, James. I just have one follow-up question. So you mentioned that the private markets are more diversified, and the commercial markets sort of have like a mandate, responsibility to their investors to get sort of like a promise of return for the investments. Do you think these ESG initiatives can be commercialized in the sense where one day it could be the main source of investments rather than the traditional type of investments into like oil and gas industries or other industries that give a promise more guaranteed returns?
Look, I think it's not. My personal view, and I know some share this as well, is that sustainability will become the norm. Sustainable investing, it won't be called sustainable investing, it'll be called investing.
Yes.
Right? And and even in the energy sector, right, whilst drilling for oil is not, in itself considered to be sustainable, if you look at what BP and Shell are doing around renewables and all that, it's not all bad, right? So I think, people will come to expect a much higher level of reporting on sustainable criteria going forward. That'll just become standard, right? And it already is gaining traction. Stock exchanges are requiring more reporting on certain ESG factors, and many investors are as well, right? And there are firms, analytical firms, ratings doing ESG ratings. There's a number of them. Now Moody's has one, S&P has one, and there's another. Robeco have their own. There's a number out there. So yes, I think it's getting to the point where if you're not doing it, you're gonna be the odd one out, right?
Yes.
I mean, it's probably already, right? It's probably, and it's just, and the process is getting refined more and more. I mean, there's a lot of subjectivity in what is sustainable, what is impact, what, and so people have to understand what they're doing and what their approach is. But yes, I see it going in that direction. And even, if you look at the venture capital industry, for example, I have a friend of mine who's raising a VC fund now for impact. And she said, what's happening though, is she keeps running into traditional VC funds who are now rebranding themselves as impact, right? Because they see that it's, the popular place to be. And, they're not true impact, but at least you can see the movement in that direction, because they are seeing what they're listening to their investors, basically what's happening. People are saying, okay, well, look, if I can make the same returns or better, why, I should be investing in that manner.
Yes, that's a great answer, James. Exactly what I was thinking. So moving on to the next question. Obviously, COVID-19 is extremely severe, and most businesses and firms have been disrupted and are forced to alter their business outlook and strategies. As a fellow business owner yourself in several different sectors, how has this pandemic affected your business outlook and perspectives on economic growth going forward?
So this is a product which is sold primarily through bars and festivals and the like of that. So clearly COVID-19 has had a major impact on this business, negative impact, I should say. We sell a lot. Australia is a big market for us. Indonesia is a big market for us. Thailand, hotels are big markets. We're launching we have launched on a small scale in the UK, but we're set to launch bigger. We've been talking to Tesco, for example. France, we're ready to go. But clearly, if bars aren't open, there's no market for us to sell our product into. So this, and I think this is, a lot of businesses have seen this in the F&B sector. They can continue through smaller channels, but when your main channel is just shut globally, right? This hasn't happened ever, probably, right? And I think what we've had to do, and I mentioned this earlier, we're a very lean business. We've cut our costs right back. We've used the time to look at our business and to reassess our strategy, but also to continue pushing our key markets. So building relationships. We've signed up new distributors in France, the UK, Benelux, Singapore. We've got ourselves into Woolworths now in Australia, into their coastal stores, things like that. So we're able to do this while we have a bit of downtime, to use it effectively to think about how this business can grow once markets reopen. Right, so that's one example, right? So this is one business which, our revenue has gone basically to zero. We lost we had some big sales we were expecting in March. Those just got postponed, right? And then clearly over the next few months, we're assuming in October we can pretty much restart again, but we don't know. So that's one that has struggled, along with a lot of businesses in that segment. I would say though, if you're an alcohol producer that sells through supermarkets and retail outlets, you've done really well, right? Because, and those retailers themselves have done extremely well. I mean, the Dan Murphy's, which is, I think, the main liquor stores in Australia, a few weeks ago had their best ever weekend, better than any Christmas or New Year, because everyone was buying alcohol for lockdown. So if you're in those channels, you're okay. And unfortunately, we're only slightly in those channels. The other business which has benefited, so this is flipping around, this is cold brew coffee. So this is in Singapore and Bali. Bali is fine, it's small, but in Singapore, our revenue has gone up by 5 times in 2 months, right? As people start working from home and wanting to have their cold brew coffee. We have a very good online platform and logistics. So we were able to capitalize immediately on the demand for people to have stuff delivered to their homes. And we're hoping that this survives post lockdown. People like the product. So that was, there are winners and there are losers in here, right? And I'm fortunate, I suppose, to be part of winner and a loser. Although I'd say the rum we're a partial loser. There's still some victories in there. And then this is the finance business, RJ Fleming. So in what we do, I mean, the beauty of in finance and corporate finance on the advisory side where I am, we can provide advice in good times and bad times, right? It's in our Middle East business now, we're seeing a large amount of restructuring work. Whether that be in banks or other industries. There's some fairly high-profile businesses in the Middle East which are needing restructuring, and we're getting ourselves involved in those. At the same time, business goes on. I mean, there are infrastructure projects, for example. They still need to happen, right? And they still will happen. I mean, we're working on 2 infrastructure projects in Indonesia now. So I think when you look at the finance world, clearly it's a massively diverse industry, right? And there are sectors of the finance industry which have suffered badly from this. I mean, if you were exposed to equities as the markets crashed, that's clearly a big issue for you. But when if you're advising someone on raising funding for, a toll road, that is almost, there's an impact, but it's almost periphery because you're looking at a 20-year infrastructure project. So I think that, just to give you an example of where, there are parts of course, there are parts of the industry which have struggled, but parts that have actually carried on almost as normal, or even, on the restructuring side are benefiting hugely, as are the lawyers, by the way, restructuring lawyers. Yes. This is their time to shine. So look, I think, I'm optimistic that markets are. Let's assume that we're not hit by second waves that shut economies again, right? Let's just. It's a bold assumption, I think. I think in Asia we're in a much better place, but as we move further west, I do fear that there are going to be some more problems. But markets, I think, should recover relatively strongly, depending on the sector, as we've discussed already. I do see that people want to bounce back. They don't want to be at home. They understand that you can't go back to what it was yet, but they want as much of that as they can, right? And the companies that can cater to those demands will benefit. So I do see, look, and I anecdotally, I'm talking to investors in the US, I'm talking to people in the UK and in the Middle East and in Asia, and most people are now saying, stuff is opening up and growth is coming back. And look at the stock markets, that's what they think as well, right? So yeah, look, winners, losers, some fairly indifferent, taking advantage of opportunities where we can. But overall, you have to remain positive that things will recover, and they'll be different, but we have to be adaptable, and we'll make it through, and hopefully there'll be some successes in the future.
Yes, definitely. I think we have time for one more short question. So going back to you being so passionate about giving back to the less fortunate, can you tell us, how did you get into sort of co-founding the Nepal Initiative, coming from a very corporate background in London? What sort of triggered you to sort of get into that mindset of setting up such an initiative?
So I think it goes back quite a few years. I mean, from when I can remember in my working career, I've been involved with charity. In London, when I was at UBS, we supported a charity that helped disabled people do outdoor sports and activities, and we organize an annual ski trip, and we raise lots of money around that. Then when I was in the Middle East, I raised some money for some local charities in Abu Dhabi, went off, did some adventure racing and things like that to raise money. And then I was asked to travel to Nepal as a tourist by a friend. Went up to Everest Base Camp, and I fell in love with the country. This was 2010, and just an incredible place. Went back a few weeks later, looked around some schools and was thinking about how we could help. And then actually a friend of mine in Abu Dhabi, Nepalese guy, worked in our condo, in our compound, and we got talking about his village, and I just I thought, well, how can I help this country? I know this guy, how can I help his village? So we set out to build a library in his village, and we went out, we raised some funding from friends and family and other contacts, and we built a library in this remote village in Nepal, and we put internet into the village for the first time, and that was a great feeling. And that was 2014 when we finished that, so that's a while back. And that project carried on, and we were living in Indonesia. It was a bit harder to focus on Nepal. Once I got to Singapore, I actually, through my church, traveled a couple of times to Nepal, and suddenly the network that I previously had exploded. I suddenly found myself connected to so many interesting people, and people doing so many great things, that my wife and I just said, well, why don't we actually formalize what we're doing? We've been doing this for so long informally. So we set up the Nepal Initiative with a friend of mine from an English guy, friend of mine who was living in Bali, and a Nepalese guy in Kathmandu. We focus on education broadly, would be the umbrella. We sponsor some children to be educated in Kathmandu at the moment. We're raising money for a new school that's being built in a remote area, about 70 kilometers from Kathmandu. But we're working all the time on other initiatives. How can we be entrepreneurial? How can we support entrepreneurs in Kathmandu? How can we bring our business skills to help them? And we're working with some organizations. We're also a little sort of, let's call it a diversion from education, is healthcare. When we went to Nepal last year, in June and October, we brought doctors with us because they wanted to come, but since they were with us, we ran clinics. It was fairly informal, but it with such high value to the people that we helped. And now we're organizing a telehealth trial in a couple of weeks with some of the children that we sponsor, with a Singaporean doctor, one who joined us last year. So I think that it's a huge passion of mine. It's an amazing country, but they have so much need still. And in the COVID-19 environment, those needs are amplified, as you can imagine. And we've already raised money through our church, through friends, to send over to buy basic food supplies for some of these remote areas, which are now effectively cut off. And let's put aside for now the health issue. These guys need to eat, and that's easily forgotten. It's very different. Nepal had obviously suffered a terrible earthquake in 2015, but the rest of the world rallied round to support them. But now everyone is suffering, right? The whole world is suffering. So it's much harder to raise money for Nepal when people in London are donating to UK charities, quite rightly, to support people in need in their own country.
Yes.
Right. So I think that's been challenging in the last few months. But there's always people who recognize the need, that where the needs are greatest. And we're fortunate to have a very great network here in Singapore of people who support us and what we're doing. But it's a big passion, and it actually blends quite well with the sustainable and impact work that I'm doing with RJ Fleming. There are a couple of impact funds in Nepal that we're talking to and seeing how we can support them and work with them on on some of their projects, whether that be renewable energy or hydropower or what have you. So it all comes together at the end.
That's a really passionate answer. Thank you, James. Just as a follow-up question to any of our viewers watching this, is there any way they can get involved with this initiative, or if they're interested in giving back in some way?
Well, for sure. I mean, there's a few ways, and I'll get your website link.
Yes.
You want to share it? I mean, there's several ways that we like to involve people. One is just time, right? Obviously we can't travel there now, but if someone has a particular subject which they're passionate about and they want to do a Zoom call with, some high school kids and say, look, have you guys ever thought about this? Right? This is something that's really interesting, because what you find in places like Nepal, what's interesting, I asked the 37 children that we sponsor, we got a questionnaire done and said, what do you want to be when you grow up? Right? And the answers were so narrow: army, doctor, teacher, basically. That was it. And a couple of outliers. But, I think what we can give these kids is an opportunity to realize what else is available out there, what other people do, what other things they can aspire to do. So I think that's something that we've been talking about doing for a while and haven't really structured yet. Everybody who comes to Nepal with me, they do that anyway, right? They spend time with these kids and we talk a lot. But I think I'd like to start building more of a remote, even building relationships and that sort of thing. Funding is obviously another. If people have capability to fundraise, we always welcome that sort of support. I mean, like I say, it's not a great environment for it now, but if people who run marathons and do that sort of thing that raise money, we'd love to be considered as a beneficiary. We do have a UK partner, so we are UK registered charity through them. So it ticks all those boxes. So those would be the two main ways. And the other thing is, what I found is, if you think you have a connection that might be helpful, someone someone you met, tell us, because what happens is, and this happens in the NGO and charity world a lot. There's a lot of silos, a lot of people doing great things but not talking to each other. And a big part of what we are doing as the Nepal Initiative is connecting people and making things more efficient. And that we've already seen fruits of that strategy. People who didn't know each other and now know each other and are really enjoying working together, for example. So I'm always happy to meet people, talk to people, anyone who has any connection to the country.
Okay, I think that's all the time we have for today's session. Thank you so much, Mr. Dauman, for taking the time to answer some of our questions and provide some really, really crucial insights on COVID-19 and your experiences. Yes, I think...
it's my pleasure.
Thank you.
The other thing I would say, look, if anyone watching wants to contact me, I'm very happy to to email or even do calls. We're happy to answer questions more specifically on any of the projects and initiatives that I'm working on. Always happy to talk.
Yes, all of Mr. Dauman's links will be shared with you guys on our social media channels. Stay tuned for the next episode. Thank you so much for watching, guys.